he's a Investor Trade member. Hit me up, wanted to go for a run. He's also training for a marathon, which is pretty sick. Man. Did you sign up for the marathon because you saw me on the marathon? Okay, so that's pretty sick. We're doing a zone 2 run, so we're trying to keep the heart rate again under 150 beats per minute. 6 miles. We're at the beach in New Jersey, the Jersey Shore.
And I wouldn't be out here if it wasn't for you either. So thanks for actually inviting me. So let's go get this.
Post run, under an hour, 6 miles, calm, cool, collective. Nice. Feeling good.
Zone 2.
Zone 2, you like that, right? Yeah. I'm telling you, if you do zone 2 for a while, you'll feel better on your faster runs. I don't know what it is, but.
And you said 80% of the time.
80% of the time.
That's a good one. I gotta start doing that one.
If you had to give any trading advice that you've learned since you've been in Investor Trade, what would you say?
Oh man, something you and Dylan both say. It's like Dylan says this, you're only as good as your last trade. And what you told me today, like you're a risk manager. That's all that matters. Stay disciplined to your risk. Let your risk be your holy grail. You know, because everyone looks for one. Yeah. But it's nothing. It's just follow your risk. Just be okay with losing what you're losing. On to the next one.
Be a good loser.
Be a good loser, man. And so that was a nice little combo we had on the run. I enjoyed it.
It's cool. I appreciate you coming.
Yeah.
So I really just wanted to start this vlog with a very important lesson about short-term trading, that it's very important if you're a short-term trader to go with the flows of the market. Now, what does Carmine mean when he's explaining go with the flows? Now, the way I look at it is the market is so unique because while it's open and while volume is being traded, new information is being presented to us as traders that we could never have even imagined could have occurred, we could have never even planned for, or we never could have even thought was even possible in the markets. So it's so unique because there are so many things that we can only plan for in the past without putting an emphasis on the present moment in the real time. Now, another way that I've always explained the market is a storyteller, and our job as traders is to simply read the story that the market is presenting to us. Now, it's not going to explicitly tell us, hey, Carmine, go long here. Hey, Carmine, go short here. It's going to leave context clues that I can put pieces to the story together to formulate a trading plan around and build analysis that I can execute off of. So our job is to read the story the market is presenting to us, and we must look at the market as a storyteller. Now, the issue with this is us as traders get so blindsided by things that we have planned out for before the market was open and things that we created based off of the past, not putting an emphasis on the present moment and in the real time. The present moment is the best moment because in the market and how unique it is, the present moment will give us all the information we need, and if it doesn't give us any information, then that's information in itself because that information is telling us there's nothing out there, there's no fish that are biting, and that's not a trade that we should be taking. What happens is we create these plans and we become so fixated on, hey, I'm bullish here, or hey, I'm bearish here, without putting an emphasis on new information the market's going to present when it's open at 9:30 Eastern time. So while the market's open, new information will be presented to us that we could have never planned for. And this is what I mean about going with the flows. Don't be so rigid. Don't sit at your desk like a statue and the market's throwing things at you. But you're sitting there frozen because you're not acceptable to change and you can't accept the uncertainty around the market. So start flowing like water, that when something's in the way, you're going to go around it and compensate for whatever's blocking you. In the market, if 1 minute you're bearish, well, guess what? If something occurs in the market, maybe somebody hits the offer really aggressively, then start turning bullish. Don't be so fixated on one idea. Go with the flows, and when the market changes, that's how you know you have to change as a trader, especially in the intraday as a short-term scalper. And Monday, to start the week, kind of validates everything that I just explained. It was a little over $20,000 profit off of about $3,000 worth of risk, trading the S&P 500. And I woke up today more bearish than I was bullish. The market had just rejected off of the supply zone really well. We sold off aggressively, and in the first minute, there was some significant selling volume on this strong drop candle. And I labeled this as a level of sellers that honestly I was watching for the market to come back into to reject to take the market short, as this again was more bearish than bullish. However, it's so vital to simply just go with the flows of the market. The market had eventually broken above this blue line, which is at 55.10, that I was watching for sellers to appear. We rally up into the supply zone, pull back into this level, and then reclaim the old level of resistance at 55.10. Now, what's important here is on this reclaim, there was some significant buying volume that indicated that this move may want to go up and test higher prices. Here you can see some significant sized green bubbles indicating strong buying volume here hitting the offer, and another one here which gave me the confirmation to take this thing long today once the level of old resistance was reclaimed, and then the market had a really strong rally up, and it was a 14-point gain off of 3 points worth of risk. The point I'm trying to get here is go with the flows. If the market's providing something that's saying buyers are in control, then go with those flows. Don't go against it, because that's when you're going to get run over by the market, especially if you cannot remain objective and you always think you're right and you always think you know where the market's going to head. All right, just got done. We did a mile warm-up. Then we did 4 1-mile sprints. But each mile, we went through the half mile at, what was the first 2 laps? About 8-minute mile pace for the first 2 laps. And then the following 2 laps, without stopping, we did between 6-minute mile pace to 6:30 mile pace. Finished the workout at a 6:50 average pace through 4 miles. Trying to build the second portion of the race endurance. So we start off slow and then build up the pace and speed after to get that second wind when we feel most tired. It's going to give us that extra push. I thought it was pretty good. I could have kept going. I'm glad I did it. Didn't want to do it at all today, but what do you got to tell the people if they want to quit?
Grow a set of balls, don't be a bitch. I guess the clean version of that is suck it up and just get it done.
Sir.
That's it.
Start of the month, Thursday, down a little over $1,000, and this would have been a really good day. Today was an insane sell-off, just a straight shot down. Basically no bids in the market. We just kept moving lower and lower. We rejected the supply zone up here. In fact, what really makes today not a good feeling is, despite it being a red day, was my plan wanted to short the supply zone at 5591. I do not want to be longing a breakout in this range, as it's possible for sellers to appear at the 5591 level. The market opened up, we had 10 a.m. news, we hit 5591 supply perfectly, and we sell off, and I missed the sell-off. Now, if you recall the previous vlog that I did on my channel, there were a couple of setups where I took stupid trades because I missed an earlier setup. So I missed this earlier short, and I was really concerned with trying to catch a bottom and call a low and try to take this thing long, speculating that it was going to bounce. And it pretty much never did the whole day. And I had 2 trades which were good. They were in profit, 7 to 10 points. I have a rule of thumb that if I take a trade on the S&P where I'm in profit 7 to 10 points, I don't let it go red on me, and I'll take it off for break even or just a small little couple tick win, just to protect myself. It's a rule of thumb, and despite 3 trades not working to the long side, this is how I was able to come out with a loss that I'm happy about taking because it's so small, but not so happy about missing the short because I had such a perfect plan for it. So now I really want to talk about the month of July. We can recap this a little bit. I'm going to show you all my brokerage statement. However, first I want to talk about my P&L calendar. And in the first 2 weeks of this month, I cannot recall the last time that I was red halfway through the month. And to be as transparent as possible, I was struggling severely in the first 2 weeks. I made a post about it as well, that I had a 23% win rate if we were to cover up the first or the last 2 weeks. To start the month, I had a 23% win rate. I was red on the month, and I was struggling to take good setups. Every trade I was taking was losing. I was struggling. I was getting in my head, and it was very frustrating. And we could see that here. Loss, 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 loss. Another loss, another loss. In fact, the end of the month, out of 14 trading days, I lost out of those 14 days, I lost on 8 of them and only came out green on 6 of them. Yet by the end of the month, I had a 46% win rate, a $72,000 gross profit, and a little over 3-to-1 risk to reward ratio. Now, I am always one to very proudly say how great I am in risk management and keeping my losses extremely small relative to my wins. That when I win, the wins completely outweigh the losing trades. For example, I had a day where I took one trade, which was a $20,000 profit. I had another day where I lost about $5,000, right? So if we were to compare the losses to the wins, they are significantly higher when I am right, and when I am wrong, I cut the trade at my predetermined plan, or even before that to protect myself, like I said with my 7 to 10 point rule. Now, on my Instagram, I'm going to fully break this down. If you're not following me on my Instagram, I recommend to do so. But now pulling up the brokerage statement, we could see here, if I were to zoom in, started the month with about $166,000. My account grew by a little under $70,000 in July, despite so many wrongdoings and mistakes and despite the apparent struggle to start the month. So let's break it down even further. Let's talk about, some of the trades. What was my confirmation? Why did I enter? How did I manage the trade properly? And, what was I analyzing with the market? And I first want to talk about the 3 trades on July 17th. So this was what I call a break-even trade. Again, going over my 7 to 10 point rule. This is just a personal rule that I use, that if the market moves in my favor when I enter the setup 7 to 10 points, I never let it turn red on me, because if the market does move in my favor with how I confirmed that setup, it really shouldn't have any business revisiting where I entered the trade. And you'll see that with the winning trades that I take usually work out right away. So really what I did here was I shorted this red line at 56.65. It was really tight risk, was risking above the 69s. So it was about a 3-point risk, and targeting the 55s, which was all the way down here. And the 55s represented the open price of the day, which I'm going to highlight here by this green line. So short at the red line, looking to target the green line. And this trade moved in my favor about 7 or 8 points and then reversed on me and came up. And I sold out of this trade for break even though it was a small $300 win. It was a 1-tick win with the size that I'm trading. Now the next trade was the same exact thing. Now just to even, go this even further, in the intraday commentary tab of the Invest the Trade community, I post all my trades, win or loss, in real time of, what I'm watching, setups I'm looking out for, levels I'm looking to trade around. And, this was our 56.65 level that we were watching the market to come into. Rejected, wanted a strong breakdown, was up 3-to-1 on it, basically exited for break even. And then a few minutes later, I re-entered this trade short with the same thesis and the same exact plan. Just earlier, I missed the time to the move. Now, if I were to go back and add my red line here at 56.65, it would be up here. The market put in a lower high, then began to sell off, and I exited this trade for a $4,500 loss, which was a little above my planned risk due to slippage, which was about a 3-point loss. And this goes to show you that the first trade was a break even because I was up 7 to 10 points on it. And then the second trade was an originally planned loss because I never was up on the trade and it just hit my stop loss about 2-3 minutes after I entered the setup. Now the third trade was the same exact analysis. Short at the 68s, 2-point stop loss, going for an 8 to 16 point target on this. Shorting the strength, looking to capture a reversal at an area of resistance. The market broke down, began to sell off, scaled out along the way, and this trade was a $24,000 profit, 8-to-1 risk to reward versus a 6.7 planned risk. So this goes to show you, if you take 1 or 2 good setups, they will outweigh 2, 3, 4 losing setups. This win has nothing compared to the 2 other trades that I took to start this session. In fact, I never gave up on the analysis and I kept trading the same way with the same confirmations.
But the earlier first couple of trades, I just simply missed time the move, and the market really wasn't ready when I entered it. But when I timed it correctly, I was able to capitalize on the move that I wanted, and this is how the market sold off, and I was able to capitalize on such a strong, profitable day. And really just to talk about why risk management is so key, this was a 6-to-1 planned risk to reward ratio on July 12th. I stopped out of this trade for about a 1-point loss, which was an $1,100 losing trade on Friday. Next setup, $3,000 loss. Same exact thing. Looking to short the highs, looking to capitalize on a reversal. Started the day 0 for 2, down about $4,000. This was a 7.5 planned risk to reward ratio. $2,600 worth of risk for about a $20,000 reward if I was correct on the trade. Never worked out on me. Stopped out of this trade for a loss. Third trade on the day, $750 loss. Now things are starting to brew a little bit. I'm taking these setups short. I'm mistiming it. It's not really going against me, but I'm being a little defensive and I'm protecting myself. And this was a $1,500 risk for a $2,200 or $22,000 gain. Didn't work out. Stopped out of this. Now my mistake with this trade was my stop loss never hit. My stop loss was at the 88s. It never hit, and I should have been in this third trade, but I got out to protect myself. I was a little defensive, a little too conservative, and it kind of bit me, in the butt. However, with the thought of re-entering, look at the fourth setup on the day. The fourth setup was a $4,500 loss. Now, yeah, I didn't sell at my target. Yeah, I had to sell early because the market bounced. Yes, the market didn't continue to move down, and I got a little greedy with this because my target did hit, but I wanted a little more profits, and this is what you get for not selling at your target. If I sold at my target, it would have been a $10,000 profit. It would have completely outweighed the earlier 3 losses that I took. However, I didn't sell at my target. I exited this trade for a 1-to-1 risk to reward ratio, which is not good at all. Still came out with a profitable trade, $4,500, and that goes to show you why risk management is crucial. 3 earlier setups with the short trade did not work. The fourth trade did work, didn't sell at my target, yet I still came out with profits by the end of this. Risk management is crucial. Cut the trade when you are incorrect and make sure your winning trades are taking care of the losers. Take 2 steps forward and 1 step back. If you do that, you're in the position to propel yourself forward in trading, and your success will come for you.